Oh God. All right. What is up, everybody? Welcome to another episode of CRL. It's Chart Request Live, the show where you provide the requests, we provide the charts. Spencer Israel here with JC Peretz from All Star Charts. If you don't know the drill by now, know it. And put a ticker in the chat if you have a question, or even better, you can email us ahead of time. I check the inbox before we go live, and I write down all of the tickers that have been emailed to us, and I get to those first. So questions at stockmarketmedia.com is the email address. Email us, and we will a better chance of discussing your ticker on the show. Let's start with the email. Let's start with Nvidia. I did not write down this week who made these requests, just what the requests were, JC. So Nvidia, obviously in focus all week. It does report tomorrow. We were talking about the straddle this morning on Spaces. It's like $50. So IV is like 70%. So Wall Street has no idea what to make of this one heading into its report. JC, you're drawing a whole bunch of lines here. What are you doing?
Well, this is how we well, first of all, Spencer, nice to see you, buddy. You know, you looking good, looking slim. Perlman's like, yo, Spencer's looking
shirt.
Good these days.
It's a new shirt from Target. I bought it yesterday. So or
looking,
2 days ago.
Looking sharp. Hold on. Do we have we got the right mic on? We're good. Oh yeah, here we go. So for me, I mean, let's remember what this is. I mean, this is a monster. You know, I like to put things in perspective when it comes to Nvidia. This is a $1.1 trillion market capitalization company. I mean, that is virtually unheard of. And let's think about the how far we've come, right? These are tremendous gains. I mean, this is a stock that was in the 30s now. I believe it's split adjusted at this point, but for all intents and purposes, down in the 30s. And now it's pushing $500. There was a huge upgrade, I believe you mentioned. Somebody didn't you tell me this morning? HSBC $800 target or something?
Yeah, it wasn't an upgrade. It was a price target raise, and I think I don't know if it's a street high, but if it isn't, it's damn close. And it's like, let me check it right now. I'm pretty sure it's $760 is what HSBC said the stock will be worth in a year, which is actually not that far away. So I don't know.
Listen, we like to project using these Fibonacci extension levels when we are in, as we like to say, uncharted territory. You know, there is no support and resistance. There's no market memory here, but these projections tend to, really come into play again and again and again. You've seen it yourself, right? You were a non-believer in your pre-stock market media days, and as you've been hanging out with the All-Star Charts crew, now you see, do you not?
I have come to appreciate the power of the Fibonacci sequence, no doubt about that.
Well, listen, it's very powerful, and listen, it doesn't matter how these things are calculated. The bottom line is the market respects these levels. So, listen, I think there's some trouble. Like, I mean, think about it. What we're approaching now in Nvidia is the same extensions going back to the 2018 peak, same extensions going back to the 2021 peak, all like getting together, right? There's a confluence of projections at the same levels, and it makes us focus on that more. So again, I'm not like Mr. Fibonacci guy or anything like this, but for you guys listening, wondering what these lines are, the bottom line is market tends to respect these levels. So we use them in our calculations when we are at all-time highs, which the strongest stocks throughout history tend to be. And these ratios tend. So if we start holding above 500 is really the point here. We can extend much further towards 730, 780. Like, these are huge projections higher. So, I'm not saying that we're going to rip through 500 right off the bat. We could, we can get a gap higher above 500. That could very well happen this week, by the way. I'm not saying it is, but it could. And nothing would be more bullish. I'd buy the stock in that scenario on a breakout above 500 where you get a gap and go, particularly above a key Fibonacci extension level like that, kind of get that resistance out of the way. Now that's support. Let's go. That's a possibility. I don't know what's going to happen. It could crash down back towards 350 easily. Either one of those scenarios, I'm open-minded to it. Or it could just continue to churn sideways, consolidate below 500, and then eventually break out. There's a lot of different scenarios here. I'm open-minded, but my favorite of all of those outcomes, and the one that I will actually act upon would be a gap and go above 500.
You know what would be the ultimate curveball is you wake up tomorrow morning. I'm sorry, Thursday morning, and the stock is up like 5%. That would be the curveball, right? Oh, it's barely up. It's barely down, right? That's not what the market is predicting here, at least the options market. So that would be a curveball, I think. But hey, it could happen.
I've seen stranger things, Spencer. I've seen a lot of things in my day, my friend. Nothing surprises me anymore.
I hope that helped Wavy, who asked for that one. Let's go to this other one here. PWR. Are you familiar, JC? Quanta Services. This is a construction what is this? Construction management, construction and engineering. I don't think I've ever seen this stock before. And holy moly, where have I been?
Yeah, so this one comes up on a lot of scans because of the relative strength, of course.
Yeah,
let's throw up a monthly chart.
Look at that thing.
So this is a $30 billion industrial stock. So this is one of those like engineering, construction sort of situations.
Yeah.
But it's in that sweet spot of market capitalization. Some of these other companies like this, like a Caterpillar or like a Illinois Tool Works or whatever, these things are massive. This thing's only, what is it, 30 billion, something like that? Here we go, exactly $30 billion in market capitalization. So this thing's, still relatively small. We were just talking about Fibonacci's and how we calculate those things. You basically take the high to the low, and you extend from there. So the fact that we just got above that 162, I think, is powerful. I mean, that's not nothing. So here we can kind of look something like this. Whoops. So you got to pinch your y-axis. You don't want to pinch it too much, but you want to give it a little pinch. Pinch your y-axis, tip your waiter, your bartender. Oh, damn, Jay. These logarithmic charts, they can be tolling on your mouse.
Damn, logarithmic
we're in that range. Did you lose me? Are we good?
No, we're good.
Are we good? Yeah.
Yes, we're good.
Yes. Okay. Terrific. I can't hear you, Spencer. Are you good?
Oh, really? You can't hear me?
Oh, I can't hear you. I just lost you. Here, hold on a second.
Oh, shit. Gene, can you hear me? Okay, thankfully, because I had a mic issue this morning that has never happened to me before, so it could have been me again twice in one day. I don't know, but it seems like it's working for me. So I don't know. Anyway, can you hear me? No, JC, you're on mute now.
Yeah, we're good. We're all set. We're back.
Okay.
So that's the level 162, right? So it's $100 range. We're right in between that, right? So the trend is still here, higher, making new highs today, as a matter of fact. And it's that sweet spot, man. A lot of these cyclical areas, these 20 billion, 15 billion, $30 billion companies, man, and not, they really, really stand out. They really stand out in this environment in particular. Look at something like CBOE, in the financial side. This is industrials. Financials kind of swim in that same universe. CBOE, I think, is less than 20 billion. It's $16 billion. So like, this is another example. Like, if you're listening out there and you're trying to find, some gems in this market environment from the long side, those cyclical areas and some of those 15, 20, 30, $40 billion stocks, that's a nice place to live. It's a good pond to go fishing in, Spencer.
No doubt.
You fisherman? You could do a lot of fishing in New Jersey?
No, I've only fished a couple of times in my life, actually. It's been a while. I've been meaning to get back out there. It's been a long time since I fished. All right. I need to fish more. Okay.
If you're fishing for good stocks, that cyclical 15 to $40 billion area, you'll find some gems.
Okay, we got a question here about BITO. This is the ProShares Bitcoin Strategy ETF. And so essentially a Bitcoin play, because I'm pretty sure this holds Bitcoin futures, I think. Obviously it doesn't hold Bitcoin on its own. But not a super small fund as far as assets go, but there's the chart.
Yeah, this thing's terrible. I mean, there's no other way to put it. All it does is go down since the minute it launched, right? And that's I guess, no fault of its own other than its strategy is to have Bitcoin futures. And then this line right here, you're gonna have paint it orange, right? So that's with the laser eye kids. They like the orange. So ever since this thing was launched, which is towards the end of 2021, this thing has gone nothing but go down. So until Bitcoin can get its act together, so Bitcoin represents, this is a little thick here. I think it's a little thick. Thin that out. So, if Bitcoin could get going, this BITO should be fine theoretically, I guess. For me, if I'm gonna own crypto and get a crypto exposure in the equities market, it's gonna be through the miners, Marathon or Riot, something like that. Not BITO. Maybe even micro strategies. Like that's how I trade these things. Not using BITO, if that helps.
BIT no is the answer. Okay.
Hey-o.
What about Roku? We get asked about Roku. Gosh, must be definitely this is on our frequent flyer list, no doubt. I don't know why we seem to get asked about this one all the time. I don't know what's
stock.
I don't know what's so special about Roku other than
it's a junkie stock. That's it.
I mean, it's a real business. They have, they make real money, and they have a real product.
I don't know anything about businesses and money, but as far as the stock is concerned, which is what the folks are asking about, it's a junkie stock. Like, it's like and when I mean junkie, I mean like far out on the risk curve, far out on the growth scale. Yeah. This is one of these guys here. This is what I mean by junkie stock here, Spencer.
What's this?
This is this right here, my friend.
That's ARK.
That's ARK.
Yeah.
See, you know me well already.
I didn't even have to. Yeah.
So this is one of those. One of those, right?
Uh-huh. And it makes sense because ARK owns Roku. Not a lot, but enough.
And more so that ARK owns these types of junkie stocks.
Yes.
That's what this is. So when I say, Spencer, this is a junkie stock. There you go. Exhibit A, it trades with the junkie stocks. Yeah. And by junkie, like far out on the risk curve, far out on the growth scale, on the long duration, the stuff that's gotten clobbered with bonds collapsing. Like that sort of stuff is the junkie stuff.
Yeah. Rates start to come down, money starts to flow like water again, then you would see stocks like Roku rebound for sure.
Let me tell you something, Spencer Israel. Let me tell you something. You see what you see here? This is interest rates. This is the U.S. 10-year yield. And the U.S. 10-year yield is back to where it stopped going up last fall.
Yeah.
All right. And you want to know something else there, Spencer Israel, that you don't hear anybody talking about.
What?
Is that you are not getting any overbought conditions at all in interest rates. So what does that suggest about the U.S. 10-year yield? That it is so weak and so pathetic that you can't even see overbought conditions. And the bet that you want to make on this pathetic asset of a lack of momentum is bet that it's going to go higher. No, this is the Joel Embiid of charts, just lazy running across the court slowly, right? Underachieving when it's winning time. This is the Joel Embiid of charts. Spencer, is that you speak that language?
Yeah, the analogy notwithstanding, I'm not sure I follow your logic there. You're referring to Roku though, right? When you say that, because you were talking about how the 10-year, even at whatever what is it, 10-year high, whatever the heck it is, just in spite of that, it's still not overbought, which suggests it will keep going higher, which then suggests there's no reason to like Roku. Did I follow that?
No. This trade has gotten clobbered. The ARK stocks in general, Roku just being one example of a lot of those types of stocks, have gotten clobbered as bonds have collapsed and interest rates have ripped higher. However, if my suspicions about the lack of strength in interest rates is correct, and I don't know whether it is or whether it isn't, but there's a strong chance that rates just topple over and just get slaughtered and bonds absolutely rip. In that scenario, these stocks are going to do great, in my opinion, right?
Yeah.
So I think it all comes down to less about Roku and their execution strategy.
Yeah, it's got nothing to do with. It's got nothing to do with them.
That. It's about positioning.
Yeah.
And the position is going to be bullied around by interest rates. And the fact that momentum can't even get overbought. These large speculators have ridiculous positions on. They've never been more short in history of bonds. I started buying bonds on Friday. I just dipping the old toe in the bonds. And if they get going, and as we speak, they're getting going a little bit. If they can get going, I'm going to put a real position on, big boy position. We'll see.
Yeah. Yeah,
I got a little boy position.
That's the takeaway here. Is this has nothing to do with Roku. Of all of these growth stocks, like maybe there is going to be one that actually does go higher because their business is so good and they're so great at what they do, and they grow so fast that it will buck the trend, right? But by and large,
that was Nvidia, and then ARK sold it.
Right. Okay. Fair. So we
already know which one that is.
Yeah. All right. Then that's the trend bucker. The rest of them, this is an interest rate story. Let's move on here away from Roku. What about? We'll stay with tech. What the hell? Marvell, MRVL. This is tech, but it's not like the same kind of growth as Roku is. Right. I mean, it's semis, so it's definitely going to move this week with Nvidia. Has held on to its earnings gains from a couple months ago when they reported very nicely, actually. So, MRVL, thoughts?
Listen, $50 billion, semi, obviously, out of Wilmington, Delaware.
I don't believe that. And no, they are not from Wilmington, Delaware.
Wilmington, Delaware, home of the Wilmington Blue Rocks.
I've been to a game there, actually. But I have I do not believe that this company is based in Wilmington, Delaware.
Wilmington, Delaware. It was incorporated in 1995. Has operations in the U.S., Argentina, China, India, Israel, Japan, Singapore, South Korea, Taiwan, and of course, the fan favorite around here these days, Vietnam.
I'm sure they're domiciled in Delaware, but no, they're based in like Arizona, really, or California. That's really
Wilmington, Delaware, bro. I don't know what to tell you, man.
Everyone's in Delaware, man. That's a tax thing. Come on, they're not actually from Delaware. No one's from Delaware.
I'm pretty sure they're in Delaware. Their address is 1000 Northwest Street, Suite 1200.
Suite 1200. Get out of here. Get out of here.
Am I proving your point?
All right. Anyway.
Oh, it's the little things, Spencer. It's the little things.
That's right. You know what? I think AMD is at Suite 1201. All right.
This is what this looks like right here. See that?
Yeah.
I mean, you can't even draw it up any cleaner. When you talk about like why we look at these Fibonacci levels, like this is the market. The market is respecting these levels, right? It's respecting these levels. Here's your extension, right? This is where it backed off from. This goes back, 18 years, right? So this is what I'm seeing here. And we're in this range between 57, 58, and 90, right? Let's call it 58 and 90. That's the range. So towards the lower end of the bounds, if you want to buy it above 58, that makes sense to me. Below that, things are messier. But above 58, looks good to me for a run towards 90, and then expect some trouble there like we saw trouble recently. That's the target. Until then, there's not really much to talk about. If we're to finally break out above 90, then that takes us towards 144. But those are the levels. And this is just a good example of when we've never been in a certain price throughout history. That's where the Fibonacci extensions play a role. And that's what we're seeing here.
Okay, one more from the email, and then we'll go to the chat. I know there's people waiting patiently in there. HAYW, Hayward Holdings. This is a manufacturer of energy-efficient swimming pool equipment and pool automation systems. That's what they do. This is a $3 billion company.
Industrial, another example of one of these small cap industrials. This one's smaller than the one we looked at earlier. This one out of Charlotte, North Carolina, coming in at $3 billion in market capitalization. And you know, this thing really got beat up. This thing really got beat up in that last bear market, and is sort of one of the ones still struggling to kind of get going. Right. So here what we can do is we could take the retracements. So we could take the high to the low. And this is really your big level right here. You know, this is your big one. This was support, right? Back in the first half of last year. And once that broke, that turned into resistance. So that's 16 level, still the big one. If we're able to get through, then you're looking at that 2021 level, right? Where you had that support. Then you gapped lower, right? There's that gap right there. So fill that gap towards 21 or so, right? But this thing still has work to do. I mean, we're still stuck below all of this. There's really nothing to talk about here until we're able to break above that 16, right? Does that make sense there, Spencer?
Yeah, it does. It does.
But I mean, It doesn't mean that this not a bottoming process. You know, it could be, but it still has work to do.
Okay, let's grow the chat now. I'm gonna work in order, top down. That we got a couple questions about SE or SEDG. Pick one of those two. You can do Solar Edge or you can do C Limited. I'm not sure which of these charts look worse. They both. I mean, I don't know, man. Solar Edge looks pretty brutal. Yeah, let's do Solar Edge. Let's do SEDG just because that one.
Well, here's C Limited.
All right.
So you can just see, I mean, just the destruction.
Yeah.
And then on a relative basis, making new lows. So in blue is C relative to the S&P 500, and then the candlesticks are C. I mean, this thing's just a complete disaster.
Solar Edge looks a disaster, but in a different way for a different reason. It just totally broke down. It was in a channel, and just completely broke it.
So this is, hold on, I want to zoom in a little bit on C by itself.
All right, fine.
Because we're, you know, these are some interesting levels, right? Like there's history here, Spencer, right? From this goes back to summer of 2019. Do you remember what you were doing in the summer of 2019?
I mean, no, I was working. I don't know. No,
I was getting married and honeymooning in Europe, Spencer.
Oh wow, I was
hanging out in Greece with a bunch of Greeks, eating Greek food, doing Greek things. It was fantastic.
Very nice. You had a better summer than me.
It was a great summer. So that's what I was doing when C Limited was putting in its high here. I was drinking Asiptico in Santorini.
Hey.
Naxos is my favorite. When you plan that trip with your wife, you talk to me. I'll set you up.
Don't worry about that. This
is the level right here. 38, 39. You know? Right? That's the level there. You know, maybe there's a bid to catch here. Maybe there's a bid to catch. You start seeing this back in the 40s, you know, you start seeing back in the 40s and we can get going and we could see a squeeze there. Right now it's at 37, down another 4.5%. So we're not seeing any evidence that that's happening at all. In fact, what's currently happening is the exact opposite of what I would be looking for from a long position. I certainly wouldn't short it at this point. And volatility's my suspicion is very elevated, too expensive to buy any kind of put options. So this is something that I would only look to from the long side. And boy, you know, if this is what you're buying, you're probably not looking hard enough. Is sort of what I'm looking at. But that doesn't change the fact that there's an opportunity here with potentially a very well-defined risk with an exponentially greater reward. That is probably worth keep an eye on.
As long as your risk is defined, there's always going to, you know, the trading can only be so bad. Okay. What about Ulta Beauty for Daniel here in the chat? I have no clue what this chart looks like. Not a clue. I don't know if I would have guessed that.
This thing's been an absolute beast. I'm familiar with them.
I remember the highs, but I couldn't have told you. That was a month ago. I last looked at this thing, so couldn't tell you what it's done since then.
My buddy's in commercial real estate, and this is one of his clients. Like he helps them find locations for their like in mini malls and stuff.
Sure.
So that's your longer term chart right there. So why don't we zoom in a little closer?
Okay, so it did come off those earnings highs. I think that's what that was, unless it was something else. I don't know.
So this is shorter term, right? So when you look long term, you know, you're making higher highs, right? But when you zoom in short term, now it's a mess. Like this is literally a mess. And we're down here right now, down another 4% today. So we're down here. So I mean, again, similar to C Limited, if this is the stuff you're buying in this environment, like could it work? I guess, but like you're just setting yourself up like this is, you know, I don't see anything from the short side here either. It's kind of just like a mess. Maybe sell the wings. You know, if we get a little bit of a bounce towards 460, maybe you could sell the 490s and 490 calls and then sell the 430 puts. That might work. Like if you, but we're at 430 now. So I don't know. If we start to rally, get back up towards 455 or so, we get back up towards there, maybe sell the strangle. But right here, I'm just not seeing any trade at all.
Okay.
Makes me just very grateful in life that I'm not participating in this particular market, you know?
Yeah. But let's do a couple more, then we'll hop. Well, let's do Lowe's. Somebody asked about Lowe's just because they had earnings overnight this morning. I think. Yeah, Financial Freedom asked about Lowe's, LOW, not there's two Lowe's stocks, which is very confusing, by the way. But LOW is the one that we care about.
I mean, this was resistance all along. Right? I mean, just for so long, just trouble. And now the question is, does this turn into support? Right? We're seeing 225 today, so it certainly is so far. But what does that really mean? Right? Can it hold it? I'd say you gotta be above 221, which it is. You know, looking for that bounce, right? Looking for that bounce. See if we can stick it. Yeah, if it's above 220 from the long side for a trade back up to 338, I don't hate it. You know, maybe sell some puts, maybe sell some 215s if you could get the 215s, something like that. I'd talk to Sean about this. Yeah. Sell some puts, maybe use some of that capital, and maybe buy some out of the money calls, maybe buy some 235s. I don't know. There's something there. I'm interested in selling some puts.
Okay.
215s, if you could, if that even is a strike, I'd have to look.
Okay. Question: are you able to get international symbols on here, or do you just have US? You are. Okay. We're getting a question from Nick Kunj. Nick Kunj, I'm going to ask, man. Okay. I hope you're happy. Ever Ready Industries, they're not listed in the US. They have a ticker in India. I guess it's Ever Ready, like EVEREADY.
No, if it's an ADR, we'll talk about the ADRs.
It's not listed in the US. That's
right. Let's get one more chart.
Okay, hold on. So we can't talk about charts that aren't listed in the US because we don't have the.
We can. There's just no. I mean, nobody's going to trade those things.
Well, this guy might.
Well, in India, yeah, for sure, but not. Yeah, you can't just open an account in Mumbai.
Right, exactly. Difficult for us to trade them. Why
don't I just finish up here?
Hold on. There's one more question from One Hole, which is, and he's talking about. So when you chart ETFs, do you factor in their decay rate? And he's talking about TQQQ versus QQQ. TQQQ and SQQQ, for that matter, are the leveraged and inverse versions of QQQ.
We don't necessarily chart the leveraged ETFs. If you want to use a leveraged ETF to express a thesis, you're welcome to, but we're always going to do the analysis on the underlying.
Yeah. Yep.
So if it's a leveraged trade on the Qs, like that's great. The chart itself doesn't matter. We're looking at the chart of Qs. Right?
Yeah. Okay, sorry. Someone goes in the chat. If Tom leaves the Tiger Woods of the stock market, JC's the John Daly. I don't know what that. I don't know if that's a compliment or not. I don't
You
think it
know,
is.
I guess,
I don't know if that's a compliment. Maybe
listen, what do they say?
Good,
You're not around for a
golfer.
long time. You're around for a good time. What do they say? You know, I'm with John Daly on that. I'd rather drink a John Daly than what is it? A Tom Arnold? What's the guy? The older golfer?
Oh, Arnold Palmer. Come on.
Arnold Palmer. Tom Arnold. Arnold Palmer. All right, I gotta go.
Yeah, we gotta go. I will see all of you at 1000 Northwest Street, Suite 1200, Wilmington, Delaware. No, I won't actually see you there. That'll be a wrap for us on CRL. Smash the like, subscribe to our channel, email us with your questions for our next show, Thursday, 1 p.m. with Straza and Pat. Until then, have a good one.
Adios.